I think peace of mind is really important too.
Yeah.
That you talk about just having peace of mind with your business and knowing that you are doing things the right way.
I would say that is probably the greatest benefit of keeping things separated from your personal and your business finances. You're listening to the Isn't That Rich podcast, and we're your hosts, Jill Franks
and Ashley McVicker. As young females in the banking industry, we love simplifying the confusing yet everyday questions you have about money.
Like, how do I get my finances in order?
Where is my money really going?
How do I invest for my future?
How do I make my money work for me?
Can I really afford to buy that new home?
These are the questions that keep us up at night. And the truth is, no one was born knowing how to handle their finances.
And chances are, walking into a bank to ask for help seems intimidating.
Whether you're a single person in your early 20s saving for your first home,
or you're an empty nester wondering what to do with that extra spending cash,
this is the podcast for you.
So today's topic is something that I am pretty passionate about. It's something we see every day at the bank. Small business owners come in and they're looking for ways to grow their business, whether that be because they've grown too big for their current business, they're looking to expand in maybe a new location, or maybe they need a loan to expand by buying new equipment. But a lot of times these small business owners don't have their financial stuff buttoned up, so to say. And it's for good reason. And today we're talking about why it's important to keep our business finances separate from our personal finances.
Yeah, we see a lot of people come into the bank that have started a side hustle or have just been doing things for cash for a while. And like Jill just said, now is the time to separate those finances, because there are way more benefits to separating them than keeping them together or not claiming it as a business at all.
Right. And before we get into why it's important to separate it, all the benefits of separating your accounts, we're going to tell you when you should actually open up a business account. Mm-hmm. And it really, when you should open up a separate account for your businesses is as soon as you are ready to start accepting payments from that business. So as soon as you start getting paid, it's time to separate things.
Yeah. Let's not wait around. Let's not build up a bunch of cash and then decide to do it.
Yeah.
Let's make those business accounts right now.
Yeah. And even if you're just getting started, like Ashley mentioned, you have a side hustle and you're not sure where it's going to go or where it's going to lead. The best thing you can do now is to set up a separate account. So when it does lead somewhere or it grows, or just setting yourself up for success with that small business from the start will have huge benefits and payoffs later on.
Yes. And Jill, I think there's two things kind of that we really want to focus on today with this topic. And it's that there's two different things. So there's becoming a business entity, and we're going to talk about that just in a second, about sole proprietorship, LLC, but also when you need to make a separate bank account.
Yeah. So let's get into why.
Just jump right in.
Let's jump in. So we're going to talk about 5 different benefits of separating your personal accounts from your business accounts. And your first reason, it's probably the biggest one out there, and it is to protect yourself for liability reasons. Mm-hmm. And we can talk a little bit about that, Ashley. So let's get into, first, before we get into liability, let's talk about structures of business, because you kind of hit on it a little bit.
Yeah. So Jill, what's the difference? The most common business structure that we kind of see in the banking industry is a sole proprietorship or an LLC. And so could you maybe go through, because you're a business owner, what's maybe the difference and the benefits, pros and cons between a sole proprietorship and an LLC?
Right.
And then we'll get into why maybe an LLC can probably protect you a little bit more.
Yeah. So a sole proprietorship is easy to form. You don't have to do anything. And it gives you complete control of your business. You have complete control. You don't have to file anything or make a payment for it. If you're doing business under your social security number, you have a sole proprietorship. In fact, you're automatically considered that if you're doing any kind of business activities without an LLC or forming any other business structure. There are a lot of owners out there who operate as a sole proprietorship, and that's totally fine.
It's probably the easiest, you would say, and it's free.
And it's free.
Yeah.
Yeah. And And it can be a really great choice for those businesses that have a low risk. You're not doing risky things. You're not out there. I think a construction worker would be a really high risk business.
Probably don't
right?
want to be a sole proprietor.
So you're not going to be more of a sole proprietor if you have those high risks, high risk of having a lawsuit filed against you, right? So those lower risk, not so...
They don't carry that much liability.
Exactly.
Is the best way to describe it.
Yeah.
Which moves us into an LLC,
Right.
which is a
limited liability company. Right. So there are different ways to set up your business in different structures. We talked about sole proprietorship, and that is if you are by yourself, you don't have any employees. The next one, even if you are alone, you can still file for an LLC. And that just kind of limits the liability that you take on. It separates your personal assets from your business assets, and it allows you to have a business bank account and all that kind of stuff. You can still have a business bank account as a sole proprietorship. There are steps you can take, but it's not necessary. But we're going to get into more of that now. So after an LLC, there's S corps and other kind of corporations that you can file. If it's a nonprofit, you can also file that kind of thing. We're not going to get into structure. That's for a whole other episode. But just know if you file for an LLC or some other kind of business structure, it limits the liability that you take on as a business.
In simple terms, that means if somebody came after me and wanted to sue me, but I had... for business purposes, they wanted to sue me, but I had Ashley McVicker LLC. They could only go after my business assets, not my personal assets.
Exactly.
Correct.
And you
Which is
said,
great.
Yeah. So like you said earlier, $100,000 here and it's in your business account. And then you have $100,000 here and it's in your personal account. If somebody were to sue Ashley LLC, they could go after the business accounts, but not the personal accounts.
Yeah. And that's so important. And if that happened, I'd be... Thank you, Jesus, I'm an LLC. So that's a great reason you should separate business and personal.
Yeah. The second.
So easy is the second one. Build business credit.
Build your business credit. So keeping a separate business bank account from your personal account helps your business build its credit.
Easy as that. I don't even think we talk a lot about credit on here and having your own personal credit, but you never really think to build up your business credit. But what do we use credit for? It's to prove that we can pay something back with appropriate terms. And so if you need to get a loan for your business, they're going to check that out. Your lender's going to check that out. Yeah, it just shows your individual credit worthiness. And if your business is in good standing with the loans it's already taken out, maybe you have a business credit card, or maybe, if you establish a difference between your personal credit cards with a business credit card, that business credit card is going to build your credit for your business. So good. Yeah. And it just really keeps things a lot cleaner too. Yeah. Right.
Yeah.
Number three.
And this is an easy one, and it's very apparent with this one. It's going to be the taxes. So we want to keep your personal and your business account separate because of taxes.
Yeah. And we could go down a rabbit hole with this.
Right.
So we're going to keep it very brief.
Yeah. So if your business and your personal finances are commingled, you could get into big trouble when it comes tax time. So when the IRS allows you to deduct business expenses, all that I think about when I hear a deduction is that line from Schitt's Creek where it's like, write it off.
It's just a write-off. Just write it off.
Write it off.
And write-offs are great.
And they're great.
That's one thing you can use your taxes for.
Yeah. And as a business, you can write certain things off that are expenses, such as travel or office supplies, things like that. And if you make those purchases on your personal account, it can be really hard for your accountant to verify them. So when it comes time for you to get audited, if you ever do get audited, the IRS will need to also verify that. And if your accountant is having a hard time verifying what you're spending your money on, just think when it comes...
You might be in hot water with the IRS, and that's not fun. We've seen that all over TV and with the celebrities. Yeah.
We do not want to have to get audited and have any other complications come up. And they don't just do the tax year that you're in. When they audit, they go back years. So
7 years, right?
4 years typically, but they could go up to 7. So you always want to keep every single record for up to 7 years. That means every single business receipt, and you want to be able to track every receipt and what it was for. So if they look back 4 years and there's a random Starbucks charge and they question it, because Starbucks, we all know we like to use it for our personal benefit. Not every time that we get Starbucks is it for a business meeting.
Right.
But if they pull up that receipt and they don't know what it was actually on, it might come into question, and you better be able to answer those questions.
Yes.
So keeping those receipts and having good track record is so important when it comes time for tax getting audited. Yeah.
And there's a lot, so much more we could dive in deeper with taxes, but I think that's just the simplest way to explain it.
Yeah, it is. So the fourth one, just to keep things moving, we kind of touched on it with taxes, because in order for your taxes to be easy and auditing to be easy, you want to make sure your bookkeeping is clean.
We just want to keep a clear picture of everything that we're doing. Make things easy for you, for your accountant, all the people involved in your business. Keeping things separate, keeping it clean, keeping a clear picture of your cash flow, your expenses. Those are so important in a business, and keeping those things clear helps you in the future with your business and your business growth, I would definitely say.
Yeah. You know, when it comes to setting up your business account and setting that structure up that we talked about earlier, whether you're a sole proprietor, an LLC, it takes time in the beginning to set things up right. And that is what I think really holds us back from doing things the legitimate way, is that it takes time and it takes effort. I know when it comes time to set up an LLC, it costs money. And rather than doing that right up front, people don't want to pay that, and they don't want to pay the annual fees for it. But down the road, I promise, when you can keep a clear picture painted for everybody involved, and even your employees or your customers down the road, if you have painted this clear picture and there's clear separation between your personal and your business, things will just end up so much better for you.
Well, even if you're going to sell your business one day, you know, you wouldn't approach somebody that is going to pay top dollar for your business. And you're like, I mean, I don't know. I don't even have an LLC or a sole proprietorship, or I just put it all into my personal bank account. You're probably not that attractive to a buyer if you plan those things in the future, and you probably should have a succession plan for when you're wanting to sell your business one day. And so those are things you should think about with all of these topics that we're talking about today.
Yeah. The next benefit is when it comes to financing. So people come into the bank.
I love this one.
And this is a good one. And this is probably why
We've
I'm
got some
most
examples on this one.
passionate about keeping things separate.
Yeah.
Because we see it all the time. Customers come into the bank and I like to use the example of like a hairstylist. They come into the bank and they're ready to get a loan. They want to buy a home. And, you know, maybe they get a lot of their income. They receive a lot of their income in tips, and they don't necessarily claim those tips on their taxes. So they may make $80,000 a year, but their income only shows $25,000. And so when it comes time to file their taxes with the IRS, they claim that they earned $25,000 in income, when really they did make $80,000 in income. But when it comes to financing, what does the bank look at?
They look at your past 2 years
of your tax returns, right?
Yes. So if you're going in and you're wanting to buy a $300,000 house, but your paychecks say that you cannot afford a $300,000 house, even though maybe you can with your income and your tips, and I'm making up numbers right now, but we'll deny you.
Yeah.
We have to deny you because we have our due diligence to the government to give them honest records of things.
Yeah. And it's all about painting that picture that you talk about. And if it's not separate, if your accounts aren't separate, the lenders are going to have a hard time getting an accurate read on your company's financial status. And when they can't get an actual read on your ability to pay things back, the most likely answer you're going to get when you go to apply for a loan is a no, unfortunately, which is hard to hear.
And that's unfortunate when you do want to grow your business.
Yeah.
Or you want to get a home loan.
Right. Keeping things separate is so important.
It's really good.
Another example I've seen at the bank is I think we have a lot of contractors at the bank. So One thing that comes to mind is like a concrete business, right? So you have concrete, you just started this concrete business and you're paying a bunch of people when you need them to come help you pour concrete.
Paying them cash under the table.
Cash under the table is a big thing. Yeah. And so you're getting this income from these jobs you're doing, right? So you're getting paid from the invoice that you send to your customer. You're saying that they're paying you a specific amount, and then you're paying out from your pocket cash. You're taking money out and you're giving cash out to all these people. The IRS are going to look at that and saying, where the heck is all this money going?
Where'd the 5,000 go? Because we didn't see who it got sent to.
You have some expenses that you're not accounting for that could actually help you, right? So if you claim those expenses, that can help your business. And if you're not, the IRS are going to be like, what is going on with all this cash? Where is it going? There's got to be a rhyme and reason for it going out of your business.
Right. And it's not just you as the employer. I said that earlier. It's not just you as the employer. Think about your employees and protect them, because it's like what we talk about with the hairdresser. Okay, she only claimed that she made this much on her taxes. Well, if these people that are making cash, like let's say they just only accepted cash.
Right.
Well, the IRS is going to be like, how are you paying your bills if you don't have a job? Where is this money coming from? And they're able to track that stuff. Yeah. It's mind-boggling to me. And if they went to go get a home loan, like the hairdresser I'm talking about, well, they can't prove income.
That's right. And this is just my opinion. When you own a small business, personally, when I own a small business, I just really want to do things the right way. I want to make sure I'm setting things up properly. I want to make sure that everybody that's under my employment is being taken care of. And so when somebody asks to be paid under their table, it maybe sound like a good idea, but that might not be the right decision for your business if you want to keep things.
If you want your ducks in a row.
Yeah. So
I think peace of mind is really important too.
Yeah.
That you talk about. Just having peace of mind with your business and knowing that you are doing things the right way.
I would say that is probably the greatest benefit of keeping things separated from your personal and your business finances. I mean, there's no better reason to keep things separate. You easily can know when things are separate what you're spending money on, whether it belongs to the business, whether it belongs to you. Then you're not going to be digging into your personal savings. So you've saved and you've worked hard for things, right? And you can pay yourself and save it for yourself for your future instead of your business taking up all that money.
Yes. There's so many resources when it comes to talking about businesses and separating those types of finances. And we have excellent people at our bank that are willing to walk through your business with you and help you. Just provide information.
Yeah.
Talk to you about your business before you even make the first move. And if you are doing business right now and you don't have things separated, that's okay. But start now.
Yeah.
Start separating them.
Start separating things now.
All right. So I say we recap these 5 reasons that you should keep your personal and business finances separated. The first one is going to be liability protection. We don't want people coming after our personal finances when something goes wrong in business.
Absolutely. The second one is to build your business credit. You want to build that credit so you can get the best loan should you be looking to expand your business.
Mm-hmm. The third one, tax purposes. We could go deep into this one, but just know you will never avoid death and taxes. So let's just get that straight out the bat.
The fourth benefit is bookkeeping. You want to paint a clear picture to everybody involved in your business what's going on inside of it.
Absolutely. Okay, and the fifth and final one is about financing. We want to give lenders a clear picture about what they're getting into and what it's going to look like if they decide to give you a loan.
That's right. And I think there's actually the sixth one, what we talked about earlier, is the peace of mind.
Peace of mind.
Peace of mind.
Nothing's better than peace of mind.
No, you'll rest easy knowing that things are separated.
Absolutely.
And if you have any questions, you can always stop by a Farmers State Bank branch because our resources are fabulous. We have great people that want to reach out and talk to you. Otherwise, you can always visit our website at www.myfsb.com to look at our business banking account options. And we'll link everything in our show notes too.
Thanks for listening.
Thanks for listening. We'll see you next time.